right, welcome back, everybody. It's Token D Rock here with another video. Hopefully, all of you are having a wonderful day. Overall, crypto market cap is sitting just under $1.8 trillion. Bitcoin dominance has climbed up just a little bit to 41.5%. ETH dominance sitting at 19.3%. Worried about gas fees. Gas fee on ETH right now is right around 76 gwei. Bitcoin has come down yet again. It is sitting right around $39,000. Ethereum sitting right around 2,900. Solana below 100. Luna below 90. Overall, the market has not moved very much since then. Again, we are going to be having some earnings reports coming out from some big companies this week, so that may drive the market to the downside. We will continue to buy and hold, buy the dip. Not all dips are created equally, as I'm sure most of you are aware. Probably best to wait till everything drops a good 10 to 15% before you start layering in. But not financial advice, just my 2 cents. But something that I thought I would show you guys. I was actually looking at this with a friend last night. We were comparing the different altcoins to Bitcoin and stuff like that. And if you take a look at the 30-day, you guys, we can see that there are a few altcoins that are outperforming Bitcoin in the past 30 days. As we can see, BNB is only down 10.71% in the past 30 days. Solana only down 11.51%. Ethereum down 14.71%. In comparison to Bitcoin, it's down almost 17.6% in the past 30 days. And then we zoom out even further, we can see that some of these altcoins are actually in the green. We can see that Solana in the past 60 days is actually up a whopping 8.55%. You can see Binance coin is up 4.14%, and Ethereum's up 3.02%. Meanwhile, Bitcoin is hovering roughly around the same spot it was just 2 months ago, down 0.12%. I just thought I would share that with you guys. Another thing that I want to discuss is something that we went over briefly yesterday. Fidelity is offering 401k investors access to Bitcoin. They are the first retirement plan provider to do so. This is pretty big, you guys. Fidelity Investments will offer investors the option to put Bitcoin in their 401ks by the middle of this year. Just 1 to 2 months away. It's pretty soon. As the nation's largest retirement plan provider, Fidelity's decision could make crypto even more popular and mainstream than it already is. Regulators have urged caution against involving cryptocurrencies in 401ks, citing speculation, volatility, and high valuations for their concern. Crypto 401k, how it works: use a separate digital assets account, holds Bitcoin and short-term money market investments. Fidelity estimates 80 million households invest in crypto. Pretty big stuff. Again, just to read a little bit more into this, the crypto offering will be available for 23,000 employers that use Fidelity to administer their retirement account by mid-year 2022. Again, just around the corner, with $11.3 trillion in assets under administration or management. Fidelity is the nation's largest retirement plan provider, and its decision could make crypto even more popular and mainstream. There is growing interest from plan sponsors for vehicles that enable them to provide their employees access to digital assets and defined contribution plans, and in turn from individuals with an appetite to incorporate cryptocurrencies into their long-term investment strategies, said Dave Gray, head of workplace retirement offerings and platforms at Fidelity Investments. On to Bitcoin charts. All right, so as we can see, since yesterday's stream, Bitcoin has come up a bit. It was as low as 37,700, and we did break these previous lines of resistance that were originally support, but now they are now support again. We broke past 38.2, 38.350, 38.625, 38.950, and we did break above 39.3 temporarily, but the bulls got rejected ultimately at 39.5, and the price went cascading below a few lines of support, went as low as I believe 38,450 roughly, and now we are in between 39.3 and 38,950, trading between that range. As we can see, Bitcoin was overbought on a few occasions within the past 12 hours, also was oversold. So you were buying into strength, you bought then. Taking a look at the 1 hour chart, this new indicator that someone over on Instagram showed me yesterday, it basically, you go over to your indicators and you want to type this in: supply and demand multi-frame free. Basically, it shows you more or less lines of support and lines of resistance. There we go. So orange boxes, these orange rectangles, signify there's some resistance there that the bulls need to drive past. Meanwhile, these blue lines of support are zones where support exists pretty strong. So we have a lot of buyers down here. So you can see Bitcoin past few hours is facing resistance between 39.1 and 39.5, it looks like. Again, we can kind of see that here on the 1 minute chart. And then zooming out, we can see that Bitcoin is below both trend lines as of right now. That's not to say we can't go up here in the short term, but overall, I think these earnings reports are going to be rather negative. I think the stock market may take a huge SHIT as a result of that. So will we see Bitcoin do something similar? Hard to say, you guys, hard to say. But something to point out though is that we are actually testing some lines of support that we were testing just last summer towards the beginning of June and the end of May. As we can see, we were right around this line of support between roughly May 20th and roughly June 20th. So just something to consider. We could always go lower. That's why we do have this thread 4 down here, because I do think it is possible that we do visit these lines of support, but who knows? Again, just speculating. But to get onto the meat and potatoes of this video is about 40-50 minutes long. It's over on YouTube. It's by Ray Dalio. You've probably heard of the guy. He has a whole video about principles of the changing world order and stuff like that. So we're gonna go through that just a little bit. Not going to get too deep into it because otherwise this will be like a half-hour video, but more or less he kind of talks about US's history with monetary policy and stuff like that, what it has been up to for the past 75 years, going on to 100, believe it or not. But more or less, back in 1971, the US ran out of money. Paper fiat US dollars back in that point in time was backed by physical gold, but the reality is, as the government continued to print more and more fiat, the US had less and less gold on hand, because back in those days you could go to banks and simply exchange your money for gold just like that in a heartbeat. But the US had less and less gold on hand as more and more people started converting their US dollars to gold. So they realized they were going to run out of gold. So on Sunday, August 15th, 1971, President Nixon announced that the US would be breaking its promise to let people exchange US dollars for gold. The US was essentially defaulting on its debts, and again, this backing of gold was suspended temporarily. Now, something to point out is this isn't the first time they did this back in 1971. They actually did it back in 1933 during the Great Recession. FDR, the president at the time, suspended the conversion of US dollars to gold. You can no longer do that. But what's interesting is the day after both presidents announced this, the stock market soared like crazy the following day, and both cases allowed for the US to spend more than it earns via taxes by printing paper dollars, which led to the devaluing of the US dollar and the currency as a whole. So money printer goes burr, and without any increased productivity coming from the nation, this led to an increase of citizens flocking to buy stocks, gold, and other commodities, which these assets rose in value over time as the US dollar started devaluing, blah, blah, blah. And Ray Dalio claims this is nothing new, because since the beginning of time, when governments spend more, it brings in via taxes, conditions get bad, the government runs out of money, central banks run out of money, they print more money, which leads to the price of everything else to rise while your US dollar goes down. So this obscene amount of money printing happened again in 2008. So if you think we're 50 years removed from the last time this happened, well, happened back in 2008 with the huge mortgage-driven debt crisis. The government printed an obscene amount of money to, in an effort to kind of quell that debt crisis that they had on their hands at the time. And back in 2020, it was used once again to relieve the pandemic-driven economic crisis that we are experiencing to this day. So what are the takeaways? Well, he did have one principle. When central banks print crazy amount of money, buy stocks, gold, and commodities, because history has shown when governments print money like crazy, the value of stocks, gold, and other commodities goes up. It's really that simple, you guys. I do need to watch more of this video to give you guys a more or less bigger picture of where the US is, the various things that he talks about that kind of make a country on the decline, so to speak. I mean, we have crazy amounts of inflation, you guys. They're saying inflation somewhere right around 8-9%. Not buying it. We're probably close to 20 or 30%, realistically speaking. But again, time will tell. I think we are collectively on the right side of history by investing in crypto, Bitcoin, etc. We are ahead of the curve, so let's stick with it. Let's stick together on this. That about does it for today's video. If you guys found today's video informative, educational, entertaining, any way, shape, or form, please like and subscribe. If you're over on YouTube, I'd really appreciate that. Hit the notification bell to be notified when we go live next. If you want to get trading over on Binance and earn 10 USD, all you got to do is hit that link down below, deposit $100, trade with that $100, get free 10 dollars in USD. If you want $25 over on Voyager, same ordeal. Deposit $100 with the code down below. Get trading with that $100 within a few weeks. $25 free in Bitcoin is all yours. Got a link for CoinMarketCap down below as well. CoinMarketCal keeps you up to date with crypto events. And if you want to earn some free Bitcoin on everyday purchases, there is a link to BlockFi's Bitcoin Visa Signature Rewards card where you earn up to 3% back in Bitcoin on everyday purchases for your first 3 months. You own the card. After that, 1.5% is your Bitcoin back rate. But nonetheless, guys, Satoshis, whether it's a few thousand, a few 10,000, or even a few 100,000 Satoshis, will count big time moving forward and in the long run. So don't sleep on it. Earn some Bitcoin on everyday purchases. I will see you guys tomorrow, 10:10 a.m. Central Standard Time. Until then, have a great day. Take care. Invest wisely. Bye, guys.